You know that feeling when you see an official-looking envelope from the tax office? Your heart might skip a beat, or maybe you get a little excited. Well, in this explainer, we're going to break down exactly what happens next, from the moment you open that notice to what happens when you owe money, and even how you get that refund you're due.
Okay, let's just get right to it. When all is said and done, it really boils down to this one simple question. Do you owe the government, or does the government owe you? The law actually has a very clear, very structured process for both of these situations, and we're going to walk through every single step.
So, here's our game plan. We're going to start with the one document that kicks this whole thing off, the official notice. Then, we'll follow the trail of what happens if you don't pay up, the tax recovery path, and some pretty serious collection measures. After that, we'll flip the script and talk about the much happier topic of getting your refund. And to wrap it all up, we'll cover the rights that you have, the protections that are built into the system for you.
All right, first things first, every single journey through the tax system, whether it ends with you paying or getting paid, it all starts with one single, crucial piece of paper.
This document has an official name, the Notice of Demand. And according to Section 214 of the law, this is the official word from the Deputy Commissioner of Taxes. This isn't just a suggestion or an estimate. Nope, it tells you the exact final amount you either owe or will be getting back. This notice is what sets everything else in motion.
So when you get this notice, you're basically standing at a fork in the road. Path number one is an amount payable. Pretty straightforward. You owe the government. The notice will spell out exactly how much, by when, and how you need to pay it. Path number two is an amount refundable. And that's the good news. It means the government owes you money. So let's head down that first path for a bit. What happens when there's an amount payable?
So what happens if that notice says you owe money, and the deadline comes and goes, and the payment hasn't been made? Well, this is where a very formal process kicks in, known as the tax recovery path.
The process escalates in a few very clear steps. First, you miss the deadline. Simple as that. That miss triggers step two. You get an official legal designation, assessee in default. Then, things get more serious. As laid out in Section 216, a certificate for recovery is drawn up and handed over to a specialist, a tax recovery officer. And that's the handoff. From this point on, a dedicated official has one job and one job only, to collect that overdue tax.
Let's just quickly break down that term, assessee in default. It sounds complicated, right? But honestly, all it really means is that you're officially on the books for not paying your taxes on time. It's the legal switch that gets flipped, allowing for all the more serious collection actions that we're about to get into. Okay, once a tax recovery officer gets involved, the whole situation changes. The law gives them some pretty significant powers to make sure that unpaid tax gets collected.
According to Section 217, these officers have three main tools in their toolkit. First, they can attach and sell your property. We're talking everything from your car to your house. Second, in really serious cases, they actually have the power to have you arrested and detained. And third, they can appoint what's called a receiver to basically take over the management of your properties and assets. These are definitely not small slaps on the wrist.
And believe it or not, the list goes on. Section 221 gives them even more power. They can literally shut down your business. They can stop the movement of goods and services from it. They can even have your utilities, your gas, your electricity, your water, disconnected. And maybe one of the most powerful tools they have, they can go to anyone who owes you money, like a client or a tenant, and legally require them to pay that money directly to the tax office instead of you. Now, this brings us to an absolutely critical point. Once things have gotten to the tax recovery officer stage, the time for arguing about your tax bill is over. This quote from Section 219 of the law is crystal clear about it. You can't debate with the recovery officer whether the assessment was right or wrong. Their only job is to collect the amount on that certificate. Any disputes have to be handled way earlier in the game.
All right, let's leave all that serious business behind and switch gears. Let's go back to that fork in the road and talk about the much happier path, getting a refund.
So when it comes to getting your money back, the system is actually designed to be pretty quick in straightforward cases. According to Section 215, if you filed a self-assessment return and you're owed a refund, the law says it has to be sent to your bank account electronically within 60 days after your return has been processed. That's a specific, legally binding deadline. Now, it's really important to understand that getting a refund isn't always as simple as cash showing up in your account. The law has this thing called set-off, which is in Section 225. Basically, it means if the government owes you a refund for this year, but you still have an unpaid tax bill from a few years ago, they can legally use your new refund to pay off that old debt.
But, and this is a really big but, there is a critical protection for you built right into the law. Yes, they can use your refund to pay old debts. However, Section 214 is very clear that they cannot do this without first giving you an opportunity of being heard. What does that mean? It means they have to tell you what they plan to do and give you a chance to respond before they touch a single cent of your refund.
And that brings us to our final section, which is all about making sure you know your power in this situation. The tax system isn't just a list of rules and penalties for you. It also includes very specific rights and protections designed to make the process fair.
Think of this slide as your key takeaway, your cheat sheet of rights. If you're having trouble paying, you have the right to ask for an extension or a payment plan. If you're appealing a tax charge, you're protected from being labeled a defaulter while that appeal is being reviewed. We just talked about your right to be heard before they use your refund for a set-off. The system also has fail-safes. If there's a mistake, those recovery certificates can be withdrawn or fixed, and the law even makes sure that legal heirs can claim refunds for family members who can't. These are your rights, spelled out in black and white.
So, we'll end with this question. The tax system is a two-way street, with rules and responsibilities for everyone involved. That includes you and the tax authority. Understanding this whole process, from that first notice all the way to the end, is so important. Knowing not just what you have to do, but also what you're entitled to, your rights, is really the best way to navigate it all. Thanks for tuning in to this explainer.